Why did markets rip quite so hard yesterday afternoon? Was that justified based on what Jay Powell was saying?
Well, to be honest with you, Wilfred, I think it was a little bit of an overreaction. I mean, it was great to see markets tear up the green ticker tape, but a 75 basis point jump was expected. It took us to neutral at 2.5. He talked about next meeting possibly being another 50 to 75, which could take us to 3 or 3.25. So I don't look at it quite as dovishly as I think as the market did. And I think we need to continue to be careful because the problem is we don't know if what the Fed's trying to do is going to work for another 6 to 9 months. And during that time period, I think investors need to remain cautious. And so far, Wilfred, the retail investor seems to be getting it right. Last week was the 4th week in a row where investor sentiment had a read below 30, which is really bearish. And the retail investor is right to be bearish because we're in a bear market, even with a bull rally through a bear market cycle. But the idea that some investors are so bearish is becoming a little scary. I think some of them are even throwing in the towel and just going to cash. And that begins to show us signs of a bottoming process. And sometimes you can even look at that as a contrarian indicator.
Well, that's interesting, Kevin. I mean, that would suggest now is the time to be buying and that yesterday wasn't an overreaction. As we look out now, what the Fed does, is that more important than if a recession actually materializes, or if that recession does come through, whether it's confirmed under technical definitions or not? Will that outweigh whatever level of dovishness that the Fed can espouse?
Yeah, I think it really comes down to a recession. I've been on record saying I think we're in one, but then I get my knuckles spanked saying that you can't decide that, and only the National Bureau for Economic Research will determine it. And the GDP read today is going to be so important. It'll be interesting to see if it's better than we're all expecting. And I have to think that it might be, just based on the way Chairman Powell acted during that press conference yesterday. Certainly they're going to get a sneak peek at that before we do. And maybe that number is going to come in a little bit stronger. They can always adjust it lower later. But from the standpoint of 2 quarters of decelerating economic growth as measured by the GDP, we may get a pleasant surprise today. The fact that the market spiked yesterday, a bottoming process doesn't mean an all clear signal. It wasn't a capitulation point. It's not a green light. I think we need to be very, very cautious as investors for the next 6 to 9 months. But the good news is we're certainly closer to a bottom than the top. And if inflation is peaking, and if interest rates are peaking, and if Fed hawkishness is peaking, those are some pretty good signs for sure, but maybe more of a yellow light than a green light.